Hey everybody, we're going to be going over some ancillary benefits for insurance and some examples, or one main example, of how you can use this to have a more comprehensive plan. Before we get started, we'll make sure you hit the like button, subscribe to the channel, post in comments below if you have any questions. I look forward to all you guys' feedback. I love you guys. Thanks for the help and the support. We'll get started. So we'll get started here. So what I want to go over here is critical illness and cancer and heart attack and stroke insurance. Okay, this is a supplementary, it's not major medical type of insurance, but it's actually very useful, and I'm going to show you guys why. If you can see some of my math, we'll get to that in a second. But what this covers is it covers things such as strokes, heart attacks, kidney failure, internal cancers, blindness, deafness, organ transplant, and a bunch of other different things. These are typically fairly affordable policies that you can get for you and your family. They typically are very good add-ons or bolt-ons to your major health insurance. Okay. One thing you need to be sure of is read all the underwriting ins and outs of what's covered and what's not covered. Usually it's like, for example, if you have a heart attack and your doctor diagnoses, hey, you had a heart attack, then they're going to pay out 100% of whatever the benefit amount is. The other options are, if, like, let's say I go to the doctor, I have not had a heart attack yet, but they're like, hey, you need to get a certain type of open heart surgery. Boom, there's a certain percentage usually of that final amount that will pay out. Okay, so what I did over here is I ran a quote for a 35-year-old with a $50,000 cancer policy and a $50,000 heart attack and stroke attachment. Okay, this does not include the critical illness. So basically, what this covers is your stroke, heart attack, and internal cancer. Okay, but that doesn't stop this from being a good demonstration. So for a 35-year-old, the monthly premium came out to be $57.42. Okay, for a 40-year-old, it went to be $76.21. For a 45-year-old, for $50,000, it was $94.58. So you can see here, it would benefit you actually to get these sooner rather than later. Just going to throw that in there. So I was curious about something, and I looked at, if you take the price of the 35-year-old, which is $57.42, and you multiply that by 12, multiplied by 40 for 40 years, okay? So now this guy would be 75, and let's say for the entire, from age 35 to age 75, he paid a total of $27,561.16. He has a heart attack, he instantly got all of his premium money back, zero out of pocket, totally paid for itself, totally worth it, and he still has an added benefit for the cancer, because the cancer policy, this is two separate limits, okay? So you have a total of $100,000 of coverage in this example, and that is something to think with. So I'm going to keep this brief. Hope you guys got something out of that. If you have any questions or you want to reach out to me, feel free to. My numbers will be posted everywhere where you can contact me, or you can email me. That'll be in the description. Be sure to hit the like button, subscribe, and be great.